Understanding 1099 Forms. A guide to non-employee income and taxes, the 1099 form is a critical document for anyone earning income outside a traditional employer-employee relationship. Whether you're a freelancer, independent contractor, or receive investment income, understanding these forms is vital for accurate tax reporting. This guide breaks down what 1099s are, who receives them, and what you need to do with them. What is a 1099 form? A 1099 form reports income where taxes weren't automatically withheld. Unlike a W-2, which comes from your employer, a 1099 indicates you were paid as a non-employee. The IRS uses these forms to track income earned through freelancing, contract work, interest, dividends, or other miscellaneous sources. Why this matters? The IRS expects this income to be reported on your tax return. Ignoring a 1099 can lead to penalties, interest charges, and even an audit. Who receives a 1099 form? You'll receive a 1099 if you earned $600 or more from a single payer in certain situations. Common scenarios include freelancing contract work, clients paying you for services, business ownership, if you hired contractors and paid them $600 or more, interest dividends, banks or investment firms reporting earnings, debt forgiveness, when a lender cancels a portion of your debt, online marketplaces, earning over $20,000 on platforms like eBay or Etsy. Some income types have lower thresholds, such as royalties, where you might receive a 1099 after just $10 in earnings. Key types of 1099 forms. The IRS uses various 1099 forms depending on the income type. Here are the most common. 1099 NEC, non-employee compensation, for payments made to independent contractors or freelancers. 1099 MISC, miscellaneous income, for rent, royalties, prizes, and other non-service income. 1099 INT, interest income, reports interest earned from banks or financial institutions. 1099 DIV, dividends and distributions, for dividends received from investments. 1099 K, payment card and third-party network transactions, for payments processed through platforms like Venmo or PayPal. 1099 versus W-2. The core difference, the primary distinction, lies in tax withholding. W-2 income has taxes deducted at the source, while 1099 income doesn't. This means 1099 earners are often responsible for self-employment taxes, Social Security and Medicare, and may need to make quarterly estimated tax payments. What to do when you receive a 1099? Verify accuracy. Check your name, tax ID, and income amount. Contact the payer if there are errors. Keep records. Save a copy of the form for your tax filing. Report on your taxes. Enter the information into your tax software or give it to your tax professional. Ignoring a 1099 is not an option. The IRS receives a copy, and discrepancies will raise red flags. Filing requirements for businesses. If you pay contractors or freelancers, you must file 1099 NEC forms with both the recipient and the IRS. The deadline is January 31. Failure to comply can result in penalties. Tax implications of 1099 income. 1099 income is typically taxed as business income. You may be able to deduct expenses related to your work, potentially lowering your tax liability. Consulting a tax professional is highly recommended to ensure accurate filing and maximize deductions. In conclusion, 1099 forms are essential for accurate tax reporting of non-employee income. Understanding the different types, filing requirements, and potential tax implications will help you stay compliant and avoid unnecessary penalties.